Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for November the 20th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. Our hypotheses are our trade plans. We do create multiple trade plans. We do not know what the market's going to do. Therefore, we have multiple scenarios or hypos. We wait for the market to open up and then see who takes control and then execute the plan that best suits the market, and then also adjust the plan as the context changes. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and we do live trading analysis during the course of the regular trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. So please trade your own due diligence, your own trade plan, and your own risk metrics. Sorry about those messages. I was just trying to get that off the screen. All right, so let's take a look at, let's do one thing first, okay? So we're coming down here. We just put in a zipper measured move. So let's take a look at this, where the target is. This is a Globex zipper measured move, so just keep that in mind as we move into the RTH session. The zipper measured move is targeted 51.50, and it is valid until we get back above 26.65.75. Keep that in mind. But like I said, we're coming down to the Keltner lower line on the P&F chart, and we should get a little bit of a rotation. Actually, they front ran it by about 1.5 points there. So let's take a look at yesterday. Yesterday, we were talking about the fact that it was Thanksgiving weekend, week coming up here, and we were expecting the move to happen on Monday or Tuesday. I thought it would happen today, so I was looking at more of a balancing day yesterday. So we had equally weighted hypo 1s and hypo 2s. Hypo 1 was an open auction in range. It moved down into the 2750 area, the microcomposite VPOC, and then a rotation up to test the 51 area in the above us. That was our key line in the sand above. Hypo 2 was a rotation up into the 42 to 43 area, and then a rotation down, take out the overnight low, and then push down to the 2711, where we'd find buyers and rotate us back up. Both Hypo 1 and Hypo 2 did not play out. We looked like we were going to go into Hypo 2, and then we migrated to the Hypo 3. And Hypo 3 was an open test drive, open test drive up into the 38 to 40, and then sellers step in, rotate us down to the 2711, and we are targeting the 9150 on Hypo 3. And we did have that play out, and then they went sideways, and they expanded it down another 10 points. So we got expansion even on our Hypo 3, which is our trend type scenario. We ended up with a B-shaped profile. This is a distribution down here with a thin tail. The very important level to watch above us now is going to be this 99, the 2700 basically. If we can get back above that, then we've got range capabilities to travel through the thin area of the B-shaped profile. But taking a look at the overnight, overnight we are looking for continuation lower with this liquidation break, and we basically opened auction in range, and then we went sideways, and then once we broke below the range low from the RTH session and we got into the European session, things opened up and we expanded down, and we've had a pretty big range, over 40 points of range already in the Globex. Yesterday in the RTH, we had 53.25 points, and our full session was 66.5. That puts our 20-day period full session average true range at 58.29, which is pretty wide. again, lots of volatility and very, very thin on the book. If you look at the book all yesterday, you saw that the largest order on the board was less than 300 contracts, and that was your resting orders. And we did have a decent amount of volume yesterday. What did we have? Volume was 1.73. So even though the book was so thin, the volume itself was pretty incredible. All right, so let's take a look at the news. We did have economic news at 8:30. We had building permits came out worse than expected. The building permits in October were slightly better than expected, and housing starts was better than expecting. And we got a little bit of a pop, but not much. In 3 minutes, we have Red Book, and then really not much else until 11:30, where we've got the 4-week and 8-week bill auction. We've got Bank of Canada Governor member Wilkins speaking at 2:30, and that's basically it for the news. Again, what's driving this market is headline news, so just keep that in mind, because if Trump says something about China or North Korea, this is moving the market pretty well. So each day I like to start with a basic routine, and I use a simple candlestick chart. I use a 9 EMA and a 20 SMA. What I'm doing is I want to see where we are in terms of the trend. How strong is the trend? Are we getting good slope and separation? Is price paralleling the 9 nicely? Or are we breaking the 9 and challenging the trend? Or are we breaking the 9 and the 20 and violating the trend and getting a possible trend change? Beautiful, long 14-month one time framing up. Then in February, we come down and we challenge that, but we never close below the 9. We get the continuation pattern, and then we come up and we get October. October comes down and challenges, almost violates the trend, but we rotate back up and we close inside the 9 and the 20. And so far, we've just been chopping inside, and we're coming down and to challenge the 9 or the 20 SMA, and could get a trend change on the monthly. So we are seeing some weakness on the monthly. This accelerates on the weekly. We've talked about the fact that we are below the 9 and the 20, and we failed the last 2 weeks to get back above the 9. We're getting slope and separation to the downside. We're seeing the start of a possible downward trend on the weekly. On the daily, you can see that we had a nice trend down. They took it back, last week, I'm saying 2 weeks ago, and then last week they failed. And again, here we are below the 9 and the 20, and we're getting the cross of the 9 over the 20. We're seeing the start of a downward trend, possible start of a downward trend on the daily. On the 4-hour, you can see that we get the acceleration. We've got slope and separation. If we do get above the 2688, back above the 9, we've got a naked cross up here on the 4-hour up at the 2718 area, but that's a ways away. I'm not anticipating that's going to be a target today, unless we get a huge take-back day, which is unlikely due to the current context and the fact that we keep making lower lows here. Going to the 30-minute, you can see that we are in a fairly decent downward trend. We had good slope and separation. It started to soften up, and then we're getting the expansion, and we're getting slope and separation to the downside. So the trend is intact. So we're seeing some weakness all the way across the board. Let's take a look at the structure. So just to put this in context, okay, this black outline right here is our yearly microcomposite. The microcomposite VPOC is up at the 27.28 and a quarter. We went in and put that new all-time high, tried to hold value up here, had the breakdown day, and then we've come back down into this balance, and we basically, the value area is huge. on this yearly micro composite, and we basically have come down, tested below it, found buyers, rotated right back up to the top of it, failed to break out of the balance, came back down into the balance, been chopping in the middle, and now we're breaking out of the smaller micro composite, and we're going to gap down. We're going to have a gap down, and the next big target below we've been talking about is down here in the 52, 53 area. That's the area that they found price acceptance before the move up off of the fractal low down at the 2603, and likely to come down and target this today. In fact, that's going to be my main target for the day on my Hypo 1. Key area to watch is this 36. That is the value area low. That is going to be our key line in the sand below. Our key line in the sand above is going to be that 99. Well, I've actually moved it down. It's going to be the range low from yesterday, because if we get into yesterday's range, we should take a trip through that the B part of the distribution and get a test up into the top of that. We'll take a look at key areas to watch down here. Obviously, is going to be 60 area. If we get above that, I'm looking for a move up into the 64 to 68 and a move towards the half gap. But the main target below is going to be 53, and then 49 is going to be an over-under line. If we get below that 49, I'm looking for the move down into the 42 and a test of the value area low at 36, and then 36 becomes our key line in the sand below. If we get below that, I'm looking for a continuation down towards this key CLVN down at the 26, 27, 50. So taking a look at the overnight inventory. Our overnight inventory is pretty much, 100% net short. We are going to gap down. We've got a very big range already. We've got a key LVN right here at the 2670 area. Have that on, yep, right there. That's going to be a key area. And then we've got the 60. I've got that in already, and then our overnight low is continuing to expand. What is our current overnight? Where'd my chart go? Our current overnight low is 55. All right, and our overnight high is all the way up at 97.75. Excuse me for 1 second. Sorry about that. So currently right now, if we were open up down here, we've got 26.56 approximately. I'm going to have to adjust this on the open. Our close was 26.9650. So our half gap fill is going to be 26.76 and a quarter approximately. For the time being, that will be adjusted on the open. Let's say 76 a quarter. Remember that our year open is at 26.75 and a quarter. And this is going to be approximate half back. Remember that this is a big gap, and gap rules are going to be in play, so it's unlikely, the probability, if we don't close the gap within the first 2 hours, that the probability to close it becomes very small. It's like 15% probability that we close that gap. So in terms of, and again, we're creating a weak low down here. This could go below 55. Remember, we've got that, what did we say the zipper measured move target was? 51.75, and that's still valid and will remain valid. But let's talk about hypotheses. I'm looking for a gap down day and continuation. So I'm looking for an open auction out of range. I'm looking for a rotation back up towards the 70 area. and somewhere between the 70 and the 76 area, I'm looking for sellers to step in, rotate us down, take out the overnight low, push through to our main target down here at the 52.75, chop in this area, and then push through down to this target down here at 26.42. And our key line in the sand below is supposed to be 36. And then I'm looking for a basing pattern and a rotating us back up and closing somewhere right here between the 26.50 and the 26.60. That is hypo 1. So hypo 1, responsive buyers up into the 70 to 76 area. Sellers take control, rotate us down, take out the overnight low, push to the main target down here at the 52, 53 area, chop in this area, and then push through to the 42 target and start the base down here and rotate and close up here, hypo 1. Equally weighted, because of the fact that we've had such high volatility, we got hypo 2. And hypo 2 will be an open auction out of range, a move down to take out the overnight low, come down into the 50 to 49 area, maybe a probe down to 42, but somewhere in the 50 to 42 area, I'm looking for buyers to step in, rotate us up through the 26, 66, and 70, and push up into the half gap fill, find sellers, and then start rotating, going sideways, and creating a balance between the 26.70 and the 26.50. That is hypo 2. Hypo 3 is going to be a gap and go day, a trend day down, and that's going to be an open test drive, failure to close the half gap, sellers take control early and push down through to the 42 to 36, chop in this area, and then fail and push down into this 26 area to the 26.20 area. I just want to make sure that that daily downside is correct. So our overnight high is 26.9775. Daily ATR is 58.29, and our downside daily ATR is at 39.50. So we get below the daily ATR, then I'm expecting a liquidation down into the 27 to 20 area. So that's hypo 3. Open test drive, failure to close the half gap, sellers take control early, rotate us down into the 49 to 42, then fail and push through down into the 26 to 20 area. So that is hypo 3. Hypo 4 is going to be a take back day, a open test drive, take out the overnight low, take out the naked VPOC at 52.75, find buyers, rotate us up, fill the half gap, come up into the range low, and then pierce through the range low and push all the way up, taking out the overnight high and coming up into testing the 2700, and then chopping in this lower distribution and closing somewhere around the 26.95. That is hypo 4. It is going to be very thin on the book again today. So again, be caution with your risk. Don't get stubborn, because we should see an average. What did we have in terms of average rotations yesterday? Our average rotations were running at 9.25 yesterday. So we're expecting to have at least 9.25 in terms of average rotations, and likely going to get expansion on that with this move in the Globex. So you're going to see some fairly decent volatility. There is a fifth hypo, and that's basically we open auction out of range, and we get a balancing day in around between the 26.40 and the 26.70, and basically just go sideways as we move into tomorrow, and where most people are going to start taking tomorrow off, and we should see a smaller range tomorrow as we move towards the Thanksgiving day in the U.S. So that's my hypotheses for the ES. Taking a look at gold. Yesterday we were talking about accepting this this 2-day value in around the 22. If we could accept that value, we were looking for a push up to the value area high, and a break of 25 is looking for this next leg continuation up into where we fell out of the balance up here in the 1234. Nothing has really changed. We're $33 off of this fractal low. Remember that the average rotation, on the larger time frame in gold is between 38 and 43, and we had a $43 move down. Now we're moving up. We should see some resistance up here, but with this move in the indices and I think a move to risk off, we could see a push up today, and I'm looking for a push up into the 33 to 34 area and back up into this balance that we just fell out of with this move down to test back into the 1100s. If we fail to hold the 22, then look for them to auction down towards the 17 to find buyers, but I am expecting to find buyers in the 17 area and rotate us back up into the 22. I think we're just going to accept this value and continue this move up in towards this 33 today. So that's what I'm looking at in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.